All right, hello and welcome everyone. This is Kevin from Real Traders Webinar. And first off, as always, we just want to thank you for spending your Saturday morning with us. We got a special webinar lined up. We're going to be doing it today on Saturday morning. And again, we appreciate you spending that Saturday morning with us. So today, we are going to have the tag team that has come on and so many times blown us away with just insane amounts of value. Which is Mark Nicholas, the founder of Day Trading Zones. Mark's been trading for over 2 decades. He's been mentoring for about a decade. And as you all know, Mark is, when it comes to support and resistance options, Mark, he's just the man, right? We also have with us Kevin McClanahan. McClanahan, who is a principal from Merlin Capital Management. Kevin and Mark today are going to be teaching and talking about technical analysis. They're going to jump into some candlesticks, chart formations, support and resistance, and so much more. So if you guys could give me 1 second while we just unmute these guys. And let me see. So, and to answer your question, Victor, no. Mark, Kevin, you guys there?
Yes, hi, good morning.
Good morning.
Yes, good morning, everyone. Quick sound test. Good morning, Ron. Scott, good morning.
Can you hear us okay, or any of us too loud?
Good morning, Brian. I have all my guys there. Mitchell, Lisa, good morning, everyone. It's good to see everyone. Thank you for taking the time on a Saturday morning, everyone. Kevin and I are going to go through 2 things. So just to let you know, again, my name is Mark Nicholas. I'm the founder of the daytradingzones.com community and Pro Tools. I have been a trader just like you for the past 20 years, started in the prop trading firms and worked for an hedge fund called JP Capital, which was a division of Endover Trading in Fort Lauderdale. And Kevin is a friend and a trader. He has also his own fund. He trades professionally every day the SPY. That's his specialty, trading SPY weekly options. Both he and I use a very similar philosophy. And so if you are new in the community, this morning we want to talk to you about what we do every day in terms of looking at technical analysis, which is trade setup, chart formation, ideas of how you can get some entry and exits and how to manage your positions. And what we look, we both trade real money. We'll show you, Kevin, send me some shots of some of the accounts. We'll show you also some of the stuff that I have sent to the Day Trading Zones community, where I made $12,000 2 weeks ago on the SPY. This week, $3,000 after losing $3,000 on Apple. I battled my way through with SPY and Tesla. So we are 2 traders that trade real money every day, and I think that's really the taken that you have to go about today. Is that the stuff we are going to show you is not just us talking about like a nice PowerPoint and nice concept from someone and some groups of educators that you listen to that don't necessarily trade. We are in the trenches every day. I've been in those trenches for almost 20 years. Kevin has been in the trenches over 10 years successfully. So I hope that what we are going to share with you guys really brings the point home. I was looking for your screenshot. You send them to what, Day Trading Zones?
Yes.
Kev? So
yes, I did.
Go ahead.
We also want to take a look at the current market and some projections of highs and lows and areas that we can take action at. So good morning, everybody, and welcome. Thank you for being here. It's a little early on the West Coast, USA, for a webinar, but hopefully everybody's bright-eyed and bushy-tailed and ready for some discussion. What we do is we try to simplify this trading process so that you don't have to be mathematical whizzes to trade successfully every day. what we're going to talk about today are very visual references, and as we get older, we become better and better pattern recognition machines. Our brains are very adept at recognizing pattern, and and these patterns in the market repeat themselves. And the thing about price is it likes to move from one reference area to another reference area. So if we can get on the train going the correct direction, then we can profit from that.
So what we want to talk to you about first is a couple of concepts. When you look at your charts, everybody, there's three things that you need to determine. The first thing that you want to determine is trend. Okay, so you come in the morning, and Kevin and I, we do morning prep work. Kevin follows the day trading zones, actions, zones, buy zones, sell zones, and caution zones. But the point of the matter is to do your morning prep work. So your morning prep work could be, typically you want to look at your directions. You want to look at what is the trend. So typically the main trend, okay, you are going to see that on a monthly chart and a weekly chart. So this is your main trend. And what will happen is the 60-minute chart and daily charts, okay, are going to be your immediate trend. So I'll give you an example with the pen, okay? Because before we go to charts, it's important that you understand that. And again, here are some screenshots. I was looking like here are some screenshots of the trades that we do. This is Kevin here, $13,000 trading the SPY. The weeklies, SPY and Apple, that's pretty much what I do too. I focus mainly on the SPY because this is the safest. We do weekly and monthly income. That's another screenshot. That's another screenshot. And at the end of the webinar, I'll give you some day trading zones videos where we did $12,000 and stuff. But we do have losing days. We are traders that have losing trades and losing days. What I think is important that everybody recognize is that we do it. We do it every morning, and we are passionate in coming into the solo events and sharing with you the stuff that we've learned over years and years and years of practice, everybody.
Okay. Ooh, this is a good shot right here, Mark. This was Friday. This is yesterday, right? So we had a trade immediately out of the gate that was a short that made nice money, and then the market bounced. About 10 minutes into a trade, the market bounced, and then I re-shorted it, thinking that we were going to reach for lower lows. Well, I was wrong. I had to get out of that, and look at that. That's a $2,500 loss there. You just got to suck it up and move on. We got on the correct direction of that, and we were able to make back, you know, the $2,500 plus another $500 on that trade. So that ended up working out just fine. But you know, you've got to, as soon as you realize that you're wrong, you just got to flatten that trade and get on the correct side of it.
So I just also sent a video from 2 days ago or 3 days ago where I had to battle a loss on Apple. Apple was very tight on the chart, and you'll see how we trade the SPY and the Tesla. So the bottom line is we do it every day, and we want to share with you some of the stuff. So let's go back here to the routine. So every day, what we do is we come early enough, and I wake up at 5:45, 6 a.m., do the day trading zones analysis for the prop trading firms and our retail trader side. And then I immediately get a text from Kevin that says, hey, is the analysis ready? Is the analysis ready? and Kevin, because he manages his own fund, crosses the buy zone, sell zones, and the support and resistance that we offer for those 9 markets with his own analysis and own ways. So what we do is, again, let me take a pen. It's very important you understand that. If your weekly and your monthly charts are up, but suddenly you have your MACDs on the 60-minute chart that crossed down, or you have a turn on your 60 and your daily, all it says is that the overall trend is up, the immediate trend is down, and essentially if you have a support and a resistance, then let's say you have your monthlies and your weekly support and resistance here. Essentially what it says is we might have come to an area of resistance, and now the 60-minute and the dailies are pulling back. So you have to see that the 60-minute and the dailies are just indication of a pullback, everybody. They are not necessarily indication of a trend. They are just an indication of what's going on right now, maybe for the day, maybe for the next hour, as a retracement within your overall trend. So Kevin and I are very much into a trend trader, meaning that you see the George Soros and the Jim Rogers of the world, they are not being multi-billionaires trading by getting in and out and in and out, looking at their hourly chart, in and out, in and out. We do day trading on the weeklies with a small portion of our assets, but most of our accounts are within the trend, creating weeklies and monthly income. Preferably, we do futures and options. We do some forex. It's good to have everything in your toolbox, but our specialty is the SPY, the index, because it's very thick. There's a lot of volume, and we dedicate a small portion of this towards the directionals. But overall, we are trend traders, which means what? Let's go back to the graph. So if I take this blank chart, can everybody see that blank chart? Everybody, quick yes, no? So this is a blank chart of the ES since the beginning of the year, okay? And essentially, so let's see if I can.
This is the daily, guys. This is the daily chart.
Yes, so it's a daily chart, and essentially what it is, let me change the color here. It shows you, if you were looking at your MACDs, and I'll show you the MACDs that we used, essentially the weeklies plus the monthly shows you up. So if they showed you up, and we have a proprietary formulas that shows us like blue dot, blue segment up arrow, and you have a series of higher highs and higher lows, okay? Your best bet is to buy the retracement within the trend and to have most of your money in a retracement. It's very difficult for trader to look for tops. Each time you are going to look for tops, even those tops were decent, you increase the probability of losing money, especially if you have a job, especially if you are someone who have a business, someone that doesn't watch the market all day long. Those tops here are for people that should watch the market all day long. Otherwise, the easiest job that you can do for yourself is look at your weekly and monthly signals, and when you see a 60 plus a daily signal turning down, all it is that move right there, and that's a flag. That's a down flag breakup, 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 and that's another down flag breakup. Okay? So you, as a trader, it's much easier to make money and lower your risk by staying in the trend. Now, the trick is getting the bottom of a trend pretty good, because you see those spikes, the market is always nervous at the top and the bottom of a move. So what we look for is a series of trade setup or trade formation in relationship to support and resistance. So if we have a support here, and a support here, and a support here, and a support here, and a support here, I'm going to show you a couple of things. So there's two things that you have to understand. There's one thing called trade setup. A trade setup is a formula around our support and resistance that helps you entering a trade. For us, it's a cross-recross, and I'm going to show you on clean chart. It's a cross-recross of an important support or cluster. So cross-recross, which is a shift of momentum. So here, look, it crossed below the support and recrossed and retested with a higher low. That's another trade setup that I love. Cross, recross, retest. So you have a cross-recross and a retest. And I'll show you the number 3, the channel play after. The channel play on a clean PowerPoint slide. But
So
the point of the matter is we use...
Mark,
Yeah, go
one
ahead.
thing. So when he's saying that we cross the support, what he's saying is that we're piercing through that support level. Okay, so support's supposed to be a floor, and what happens is that price comes down temporarily, pierces through that floor, and looks like it's going to go lower. All right, so so we have these support levels that are proprietary to mark the day trading zones. And what we're looking for is for price to come back up and support. And then once you have a higher low that's put in, well, then then we're getting long, okay? Or we're selling some put credit spreads down below this support. So when he says cross recross, what we're talking about is that there's a line in the sand that has been crossed, okay? That's been pierced through, and then what we're going to do is buyers are going to buy price back up through that level. All right, cross, recross. Okay, go ahead.
So what we do is we are going to use those three trade setup, which I'm going to show you on the PowerPoint, and we are going to look at charts. But we do combine visually three chart formation that everybody use, but a lot of people misuse them. Number one, we use a pattern called a 2M. That's a double top, but I'll explain exactly how it works. It's called a 2M. Then there's a 2W, where the second low needs to be lower, but I'll explain to you a point of importance, which is the middle point. And there is the last one, which is a head and shoulder. So the head and shoulder, or the inverse head and shoulders, those 3-4 formation right there, those three chart formation plus those three trade setup is all you need all day long, with good support and resistance and good reading of directions on your weekly monthlies, and a good reading of your 60 and daily directions for counter trend. So we are going to pierce and break that down, but this is very important that you understand. So now, what do we call a 2M? So let's look at the bottom left. A 2M is a double top where you have a high. So people come to a high, it rejects a little bit and comes back, take the stop loss of this level where I put dashes. So they take the stop loss of level 1, we are going to call it. They take the stop loss, and what it does, it goes through the previous level, okay, and create more momentum up, and then reach a neutral point where it stops going up and recross the level 1, and now you have your double top. Now,
Good.
there's two levels on your double top that people do not understand. So obviously, people understand the recross of the previous top, but they don't really understand that this is the most important part of a double top, which is the middle part of a double top. Because what happened is, if they go down, 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 and hold that middle part level, all it is a channel. It'll come back, and it could do either a head and shoulder, or could come back and make new highs, or just could come back inside the channel. So what you have to be very, very careful on a double top, on the double bottom, is the middle part of the double top and the double bottom. It
Let
is
me
a
add one thing,
crucial
Mark.
area of support.
Good. Mark, let me add one thing, and then let's look at the August high there, right before the pullback. Shows us this exact same M top that we're talking about. August,
So yeah,
just
let
to
me
the right
clean
there,
the
buddy.
charts. Let me clean the charts, and we are going to zoom.
Good.
And you guys will better understand right there.
Good. August. So so what Mark is saying is that we're looking for an M pattern, okay? And what we got here in August was we got a no to the left now. Sorry, buddy. To the left. Go to the left.
Yeah.
To the left of that. Okay. As your first high. Okay. So the 22nd of July is your first high. Okay. 22nd of July is your first high, because I'll give you an M top and a W bottom right in sequence here. Okay, so your first high is August 22nd high, and your second high is your August the 5th high. Okay,
Here we go.
and so the line that the low there. So draw a big M just so everybody can see this M.
Right.
Yeah, good.
So okay, let me reemphasize quickly. It makes the first stop here on July the 22nd, everybody. It comes back down to the middle part of that double top, right? Comes back again, takes the stop, do the cross recross, the double top is in place, and now look what happened. This is the key area, the middle part right there. That candle is being breached here. Do you see? As soon as the middle part of the double top is breached, vroom, look at the momentum on the downside. It added about 40 points on the downside, everybody. Can everybody see that? Quick yes, no. Because a lot of people play double top and double bottom. They have no clue. Then the middle part is the most important part. Okay? So that's number one.
And this happens intraday every day. Okay? This happens at reversal times almost every single day. All right? We can see this type of a pattern now. We're looking at the daily S&P, but this happens intraday on a 5-minute, on a 15-minute chart. So we want to really hone in and look for these things.
This
now
is a great example. Yeah, hold on. Let me zoom it.
Yeah.
Let me zoom it and show everybody how we have combined two things combined that doesn't even require any day trading zones or tools to help everybody.
Beautiful.
This right there, that's your cluster high, cluster low, right there. That's your middle part. Okay? And there, right there, that's your area of support and resistance for your first stop. So I want to show you how we combine not only the double top, but with the trade setup for the support and resistance. So you have your first stop. They go, they retest like some type of a cluster that had high, low here. That becomes your most important part, the middle of your double top. They come back, they know that most of the people have their stop loss around here at number 1. They take your stop, they push it through, and now they do a trade setup, not a chart formation double top, but a trade setup, which is a cross, recross of that prior resistance, a retest of that prior resistance, which is my favorite trade setup, which is a number 3, 4. And then we're done. And when they pass through the middle part of that double top, that creates automatically more selling pressure. Now look at the same idea on the bottom side. So they go down, 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 and we create a first bottom right there, number 1. They go towards the middle, so that becomes the middle of your double bottom, which is extremely crucial. They go back, they take the stop one more time, classic double bottom. It's also a classic cross-recross of your support and resistance if you have important support around there. And typically what you'll find out is around here, which is a shoulder, head, shoulder. So same idea within the support and resistance. So you combine a trade setup with a chart formation, which the chart formation here is your head and shoulder. Your chart, your trade setup is a cross-recross, retest higher low again, number 3 on the day trading zones. Typically, those retests will be either a day trading zone support or resistance, or a combination of your monthly, weekly, some type of a combination of what you are looking in your charts on the higher time frame. Does that make sense, everybody? So you combine trade setup, cross recross, retest higher low for a long, or cross retest lower high for a short, plus a chart formation, which is either a double top, head and shoulder, or an inverse head and shoulder, or double bottom. And you see it on the ES since July. It always plays itself for a great reversal. Can everybody see that? Quick yes, no. Same at the top here, look.
Yeah,
head,
good. Thank you, Mark.
Shoulder,
I was just going to say that.
Yeah.
Let me add 2 things, 2 little subtle things. Okay. Thank you, Mark. That's excellent. So the one that he just marked was September the 20th or so. That head and shoulders. All right. This is also known as a 3-point reversal. Okay. Because you have 3 bars. All right, that make up the reversal. That's why they say that that a head and shoulders is a very strong type of reversal pattern. Okay. And so when you have a head and shoulders, all right, and prices come from the breakout of that September 9th level, okay, then you can anticipate that the target of a Head and Shoulders is back to that level, which ended in a doji on September the 30th. Can everyone see that? Okay, so it's a symmetrical pattern. So as price came in, all right, you anticipate price will exit the same way, all right? Typically, I mean, we get more speed on the downside, all right, but the target is still the same. The target of that 1670 on the S&P, that's where our target is on that Head and Shoulders, okay? So let's go back to inverse Head and Shoulders. October the 7th through the 14th, we have this inverted Head and Shoulders pattern, okay, this inverse Head and Shoulders. Again, it's a 3-point reversal, okay? The 3 bars make up this formation, okay? And so where did we break down from? We broke down from that 1695 level, okay, close to 1695 level, all right? We broke down and reversed, so where's our target? Back up at that 1690, 1695 level, okay? Is that real clear? Okay, good. So it's a
everyone
symmetrical,
clear?
yeah.
Because if you guys want us to repeat, we can detail a little bit more. Here's the point. The point is we wanted, before we show you support and resistance that we use that works for us, we want to show you on a blank chart the purity, the beauty of a blank chart. Does that make sense, everybody? Because a blank chart alone, the purity and the beauty of a blank chart gives you everything that you can know as far as chart formation. They don't give you the support and resistance, but as far as chart formation, the purity of price action is in front of you. So you don't have to read the news, you don't need to think where it's going. The purity of the chart is showing you if it's a double top, a double bottom, a cluster high, a cluster low, an inverse Head and Shoulder, or a Head and Shoulder.
Yeah, so price action is king, right? So in our book, price action is king. There's one more little subtlety I want to show you guys on August the 12th. Look at that bottoming tail hammer on August the 12th, okay? So what happens is that Mark has drawn you a price channel, okay? And when we get short up there, that cross-recross retest, okay, that he pointed out to you, Mark, can you show us that again? It's on August about the 8th, the cross-recross retest, right?
Here,
retest here.
Right there.
See, good. So we got short that retest, okay? So so you want to say to yourself, now if you're trading directionally or if you've sold calls up above this this area, then you want to say, well, where's my target? Okay, well, your target is the bottom of the channel, all right? So that's ideal, right, is the 1670 level, all right? But when it comes to real-time management, all right, I always tell my students and my traders, and I always share this with Mark's students, is that I take a bulk of my position off 85% to target, between 75 and 85% to target, and you see how that would have really saved us a lot, because support and resistance is an area, and look at that bar on August the 12th. That's a bottoming tail hammer. So as price came down, all right, buyers bought that up, and they went up and up for 2 days before price dropped back down again, put in a lower high, and then they sold it again. But what you want to do is you want to be able to manage your trade. So I always say, and write this in your notes, to be ready to, all right, to take the majority of your profits or all of your profits at 85% to target. Now we like to let trades run, okay, but you've got to realize that in an uptrend, all right, when you're short, you better be ready to take some money fast, because when you're short in an uptrending market, then you're playing against the odds, yeah. You're playing against the trend. So you have to just be aware of that. Go ahead, Mark.
Okay, so the point here is that those formation and those type of trades not only happen on a daily or weekly or a monthly, but they happen like we mentioned with Kevin earlier on. They could happen on your 60-minute and 5-minute. So ideally, we like to stay in the trend. If we have identified that the trend is up, me personally, if I take $100,000 account, I would try to play probably 80% of my asset, the $80,000, on the trend direction. And then, because I know if I am a little early, a little too late, I am overall supported by the overall trend on the monthly and the weeklies. Now, when we take counter trends like this, we do day trading. We do day trading with the SPY weekly options with Apple or SPY or whatever. But the point of the matter is this: who is a forex trader? Because we are mostly futures and options, Kevin and I. But the point of the matter is everything that we are going over right now with you guys works for everything. Is the philosophy of two guys who've done it for almost 40 years with millions of trades every year, and we are sharing with you our philosophy that if you have a monthly, weekly trend, and it's clearly established on your MACDs and everything, stay within the trend. So I want to go back again through the trade setup because people ask, can you go back again around the trade setup for support and resistance and how you mix them with chart formation? And so I'm going to this is the only slide. That's to tell you that we are not slide people. We go straight to charts. Okay, this is the only slide that I have for the people who are not aware of those slides, and they are powerful. Even if you know and you've been with us before, you got to reinforce those concepts every time. So there's 4 trade setup when you trade support and resistance, and everybody in this room and every professional trader use some type of a support and resistance. Like for instance, just that Kevin and I get some feedback. What is it that you guys use? Do you use a volume profile? Do you use Fibonacci extension retracement, moving average? What is it that everybody used to gauge every morning and get a plan of action to trade or to structure their options play or to structure their forex play? What is it that everybody plays? So Joe says, I'm using Joe. He says, show us to read the MACDs. Brian, Camarilla, Sanjay, T-Line, Hussein, Fib, James, OSI, Sanjay, Volume, Caroline, SMA and Momentum, Nelson, Cluster High, Cluster Low, and Volume. See, Nelson used something very pure, like it's almost having a blank chart. You know, Cluster High, Cluster Low, and Volume. Steve, Pivot, Joel, Moving Average, Dimitri, 8 Moving Average, Rico, Moving Average for Valerie, Fibs for Zolan, Volume for Charles, Volume Profile for Tracy. So everybody in the room is using some type of a support and resistance when they do their homework. But there is one thing that I'm going to teach you right now, what I have seen over the years that screw people trading support and resistance. And it's not difficult, but you need to be aware of it. So there's 4 formation when you trade support and resistance. Obviously, there is the trade that is from support to resistance. If you get into a long, where you have higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. But here's crucial mistake number 1 that most traders do when they trade support and resistance, everybody. What they do is they bring from support to the resistance and they get out of their long. But the crucial mistake that they do, number 1, is they short right away at the resistance. The market makers or the high frequency trading system can read the order books. They can see the depth of the level 2. They see all the bids and they see all the asks. And if they see that there's a lot of retail orders right there, a little bit above a round number, let's say that's the 1800 on the ES, when they see all those retail orders, what they'll do is they'll go through them. They are going to run you like a truck. And when they run you through like a truck, they stop you. So the crucial mistake number 1, everyone, is to short the resistance. Do not short the resistance. Wait. If this is 1800, let them stop everybody, and reach a neutral point where you don't see your tape making higher highs and higher lows or higher bids on your time and sell, and let them cross, recross, and shift the momentum. Yes, that's the same 1800, but the probability of success here is 48%. The probability of success on the cross recross is 62%. Does that make sense, everybody? Quick yes, no. Because this time you get the momentum of physics in your side. It recross, it cross, recross below. There was enough force to push it back below the resistance. So now my favorite trade is not only the cross, recross, but it's this one. My two favorite trade that I make money in and out most of the time when I'm profitable is that cross, recross, retest, lower high from the neutral point. So your stop loss should be on that end point, that high, that previous high. So you cross, recross, it could be a little bit higher from the zone. It could be, the retest could be a little lower. The bottom line, you wait for the retest as close as possible. That is one of the best trade setup, because this not only has the cross, recross, shift of momentum on your side, but it's proven one more time with a stronger force in the marketplace by creating the lower high. And last but not least, where most traders lose trading support and resistance when we trade our day trading zones, action zone, buy zone, sell zone, caution zone, or anything that we do, is that we see, and that's what we do, we specialize in support and resistance trading because it's the most easiest way to look at shift of momentum visually. And you can add a MACD. I like MACDs. I use MACDs on the Pro Tour. So you have the what happens is that if you have a channel, you have a net buyer here and a net seller here, most of the traders make the biggest mistake, which is they short here. They anticipate the break. And when you anticipate the break on the second touch, you are going to be crucified most of the time. What you want to do is 3 touches, the 2 touches to establish themselves, and trade in the trend, in the direction of the trend on the 3rd touch. So look at this, guys, because what constitutes a channel? 2 points constitute a line. That's the definition in mathematics of a line. 2 points are a line. So wait for this buyer 1 and then buyer 2 to come to have the channel. Wait for here for the seller 1, seller 2 to come. And now, if you look at your weeklies and monthly charts, or you look at the day trading zones, and it's mostly bullish, and it's the top of a buy zone, and your overall sentiment is bearish, you know that if you short that 3rd touch, the 3rd one, with a stop loss on the high candle here or here, you have a 66% chance of success. But if you trade here on the 3rd touch, and you want to short again on the 3rd touch, and it's an overall direction long, you have a 66% chance of losing. It's mathematical. It's 1 chance out of 3. Does that make sense? Everybody, quick yes, no. Because this is profound. Those are the 2 mistakes in a 10-year period that I trade real money every day. And Kevin trades real money. We show you our accounts. We show you the trades we make. So just that you understand that you're listening to 2 guys who are in the trenches every day. These are the 2 mistakes that most support and resistance traders make. They don't wait for the cross, recross, retest lower high for a short, or they don't wait for the cluster high, cluster low, 3rd touch, not the 1st, not the 2nd, but the 3rd touch that fell within the direction of the overall trend, which is your weeklies and your monthlies. And when you understand that, you are so much better than most of the traders. So just let me finish one more thing, Kevin.
Yeah,
so,
and then I'll jump in. Go ahead.
One more thing. So people say, how do you add within those trade setup, which is the cross, recross, retest, lower high for a short, or cross, recross, higher, low for a long? How do you add the chart formation? Well, then you overlay visually with that either here a top and a double top, or here a shoulder, head, shoulder on the 3rd touch, or you overlay any of those double bottom with a lower bottom, a head and shoulder, and that becomes your entire cross recross process itself. And sometimes even on the retest right there, they could make a head and shoulder. They could make another double top. So now it's very important that everybody has understood that we overlay visually very fast, because you are competing against high frequency trading system, everybody. We are overlaying the trade setup with the chart formation. Does that make sense, everybody? Because this is powerful stuff. It works every day, everyone. Every day. I'm going to show you charts on the 9 market, on the DTZ, and any charts that you want with DTZ, and I'll show you it works every day. Go ahead,
Beautiful.
Kev.
Okay, so let's look first at this ping pong. Okay, so what we're seeing, and we're seeing this on a very regular basis, okay, as in intraday, almost every single day I'm seeing this tell, okay, and what happens is that Mark has defined these channel tops, come up and touch 1 time, 2 times, and if the market is really going to pull back intraday, okay, then that 3rd touch is actually a lower high, okay? And I mean, this is funny because we get all excited about this chart review stuff, but every single day we're reviewing the charts of the underlyings that we're trading. So if you're trading Apple every day, you want to break out that chart at the end of every single day, and you want to go through the price action mentally and say, okay, can I see this formation happening? Are we in a ping pong channel, and are we breaking out of the ping pong channel? What did price look like as we were breaking out? Can I see this tell that they're describing me? Okay, so if price is going to break out lower and it's in the channel, right, then you'll get 1, 2 matching highs, and the 3rd high will be a lower high before price breaks down. Okay, and so the way you manage this, all right, is because it's one thing to get into a trade, right? We all know it's real easy to pull the trigger and get into a trade. How do I get out of the trade, right? When do I get out of the trade? Well, if we get a lower high here, all right, or a matching high, then we're getting short, all right? We have a 2 out of 3 chance to win on this trade, okay? So as we're approaching the bottom of the channel, all right, then you want to take a majority of that trade off. Take your money, okay, especially if you're new to this, all right, then you want to take your money. And those seasoned traders out there too, I think that you'll be nodding your head and agreeing with me that because sometimes we'll come down, do an undercut low, and then rip higher, okay? So what you want to do is you want to manage this trade. Take some money at the bottom of the channel, all right, and then let's see if price breaks below. Because if price does break below, then the chances are we're going to go from one red dashed line to the next one. All right, so let's say that you took 2/3 of your position off and you let 1/3 run. Okay, well that last third is going to run 3 or 4 times as far as the first part of that position. So you might have made $500 on the first part of that trade. Well, guess what? The second part of that trade's very small, and you can be comfortable and let it run lower, and you can make another $500 on that trade. So you've essentially doubled the amount of money that you've made on that trade, and your risk, you've negated your risk. As soon as you take the profits at the bottom of the channel, then you're in a riskless trade. Can you just relax, take a deep breath, and sit back and let that price run lower, okay, to the next reference level, all right? All right, so that's one thing about managing that ping pong, all right, trade. The second thing is, and I want to reinforce this, that every day do a chart review. What is price doing, all right? If somebody has got a screenshot from 5 years ago and they're trying to teach you off of it, hey, newsflash, what is price doing currently? What does it have a tendency to do? Does it have a tendency to do an inverse head and shoulders and then fail, or is it giving you signals that are following through? And what are those signals? The only way that you can pick that up is in your chart review. All right, do it on a 5-minute or a 15-minute or hourly, whatever is appropriate for you guys. But we start the day with a chart review, right, which is the monthly, weekly, daily to get the big picture. We finish the day in the evening before you go to bed go back through and look at that chart that you traded, okay? Instead of beating yourself up and saying, oh man, I missed this, I missed that, you want to say, oh, look, here's my setup. Let's take this setup. And if you have to talk out loud while you're doing your chart review, that's fine. Just shut the door so nobody thinks you're crazy, okay? But you want to give yourself some positive reinforcement, all right, on taking these trades. Okay, so that's the ping pong chart review, and then let's go backwards here to this momentum shift.
Kevin, we
right?
have some questions on it. We
Okay,
have some
go ahead.
questions. So ideally, Kevin and I are going to take some time for questions. It's pretty cool today. We have only a 1 hour event, and we were over 620 people. I don't know if can you guys see how many people are in the room? Quick, no, we have 581 people, traders in the room. So it's pretty cool, you know. It's pretty cool that in 1 hour event, we have 500, almost, we were above 600 traders just coming for just 1 hour event. When you see all the multi-speaker stuff going on in the marketplace, so
and I think it can be huge too.
We really appreciate that.
Yeah, we get super excited about this, as you can tell. But I'm telling you what, if you just learned one thing today, right? And I tell my guys, hey, if you sit in an event or you go to a convention and you learn one thing, right? Then you can come back, you can make $100 a day, $1,000 a day, whatever it happens to be. That's your goal, okay? But you come and you make that every single day, right? Then you're accumulating. Right? And then the accumulation chart for you goes from the lower left to the upper right. And that's what we want, is an accumulation of information that's actionable, that you can take action on. Oh my gosh, I see this pattern. Hey, newsflash, let's take the short, you know. So
and also I want to say, look, there's a lot of us in the room that are not day traders. There are a lot of people in the room are investors or options trader. And we just want to let you know that those pattern works for your investment. So, meaning why do we emphasize the philosophy of this? Look, we are going to go through charts, and I'm going to show you some charts on the DTZ, and we're going to look at the Trade Navigator. And so it's pretty cool that Kevin put that everybody can see, because we were 625 people, and I think it's great. You know, it's great. Anyway, the point of the matter is, if you don't do your chart analysis and your prep work the right way, everyone, you are not going to structure properly credit spreads. You are not going to structure properly investments. You are not going to properly structure day trading. 90% of the day traders lose. So if you don't have a solid plan for the day, you're increasing the probability of losing. If you have a solid plan for the day, and a solid money management game plan, then you increase your probability of making money. So all of this starts at the proper analysis, everybody, and the proper trade setup and chart formation. So we are going to go one by one on all the charts, and you guys are going to tell us. So we're going to put one of the day trading zones, and you tell me for the past 4 days on the day trading zones, what trade setup do you see? Look at it. Within the trend, so we know the trend was higher highs, higher lows, and you tell us this is a caution zone in orange, and this is a buy zone, and all we do is what? It's a retest, correct. It's a recross, it's a retest of that caution zone right there, and we recross that caution zone now, and we do the higher low, and boom, into the buy zone. Now, do we have any chart formation on this one? Yes or no? Do we have a double bottom? Do we have a double top here? Yes or no? Because that's the next question. So first question, what's the trade setup? Is it a recross or a recross higher low or lower high? Second question, do you have a chart formation, a double bottom, a double top, a head and shoulder, or a cluster high, cluster low? If you look very carefully here, all you have here is just some type of a cluster. This cluster at 78, 75, right there. Let me put an F6. So you have a zone plus you have a cluster. But you don't really have a clean, right, Kevin? You don't have a clean double bottom. No. You have a higher low. You don't have a head and shoulder. No. So all you have is a cluster high. This was a high. This was a low, support, support, breaks through the support, recross that support, and the day trading zones retest. This retest is a higher low retest, and boom, to the buy zone. And the best trade is on the retest.
And I love the way that Mark says there's a shift in momentum, right? So let's think about there's a shift in momentum, right? Sellers were in charge and buyers have taken charge, okay? So look down at that MACD as well. You see that for those of us that know MACD, okay, there's a histogram, all right? And you've got a confirming low on the histogram, but look at that second low, that higher low, okay? Your MACD is much higher, so there's a MACD divergence. And the fast line has crossed over the slow line and come back and kissed. On 11:21, look up and to the right there, you see the green line has crossed over the purple line, and it comes back, and there's a little kink there, right? We call that a kiss, all right? Sometimes it's more dramatic, and it just depends on the setting of your MACD. Is it showing you a real fast, twitchy setting, or is it on a slower setting? Now, Mark uses two settings on his to show both slow and fast, and when you see my screenshot, then you'll see that I use a different setting, all right? But I like to look for this little kiss, okay? And we are looking for a shift in momentum. We're looking because it's an uptrend, and the game is to the upside. What are we doing? We're buying the dip, right? So when market pulls back, and it did in a very civilized way pull back for 1, 2, 3 days, right? The first time all year, right? Pulled back 3 days. It's pulled back 2 days before, but 3 days. Oh my gosh, right? So we've got a 3-day pullback on our hands, down to support. All right, and look to the right here. This is 178 SPY, right? It's an even dollar amount, okay? And I got to tell you, right? And for all the traders in this room, they're going to be making money off of this for the rest of their lives. Whole numbers on SPY are support and resistance, okay? So you've got a MACD divergence, you've got a buy setup, you're in support, right? And we're buying it.
Let's do another chart. Let's keep on doing charts after charts after charts.
Let's look at Apple, because Apple it gave us a similar type of a kiss, and it's a little bit more dramatic.
Let's look at all of them. I am not prejudiced. All of them. So guys, what's going on here on the day trading zones, on the sell, on the euro? Those are not screenshots. They are real Ninja chart. We use eSignal and Ninja. So
yeah, I love it. Yeah, Euro's fine. Let's pull up Euro, because
tell me what you see here, guys. Trade setup number 1, the number 2, sorry, is there. It's the recross of the sell zone. But which chart formation do we have now? Is that combined with the chart formation, everybody? Quick yes, no. And if yes, which one?
Mark your support at 134.20 there, and they'll be able to see it a little bit better. 134.20. Draw a horizontal line there. Okay, good.
So everyone,
so you see the way we came down to support, and then they bought it up a little bit, and then boom, they put in an undercut low, right? And then we did a 180 reversal, which is basically a bullish engulfment. Okay, so we reversed 180 degrees. All right, and look at the MACD now, guys. Look at that, guys and gals. Excuse me. So as we came down to that first low, right, on 11:20, see the histogram there, right? And then when we made the lower low, wow, look at the histogram now. Is that an equal bottom on the histogram? No, that is a divergence there, okay? And then look at the line, the green line on the MACD, how it came over, crossed over the purple line, and then did a little kiss there, right? A little kink or a little kiss.
Right.
And
look
then,
at the
boom,
divergence, everybody. When we did the lower, the double bottom on the second lower low, look, this goes down, but look at the MACD. The MACD goes up.
Wow.
You have already a divergence in place. Okay.
Okay.
So this,
and then let's talk about targets
important
as well, because this had a rounded bottom quality to it. When you see a rounded bottom, right, then you want to say to yourself, continuation, right? I'm sorry, it's a reversal and a continuation higher. What is the target? It broke down from 135.40, right? See to the left there on 1120, it broke down from 135.40, right? When you have a rounded bottom, okay, or a cup with a handle, then the target is the prior highs, the area that it broke down from, all right? Now, these are old-timer rules, okay, that my dad taught me, all right, and his father taught him, okay? And they work today, right? This is all about human nature. It has not changed. Do you see the rounded bottom quality to this, okay? So we broke down from 135.40. We were going to return to 135.40, all right? If you are day trading this, okay, then you want to day trade into the zones. But if you are swing trading this, all right, if you're swing trading this, then you have your target set in place, and you want to be able to hold this up into prior highs. So we're either selling put spreads down below, all right, or we're buying the stock itself, FXE, right? Or we're doing some, diagonal, depending on how long you're going to hold it, all right? So I'm trying to address both intraday traders, swing traders, and position traders, all right?
So
Because,
go ahead. Sorry.
Okay, so you're zoomed out on this, Mark. That's beautiful, because for position traders, all right, on 11.7, right, we've got, or 11.8, look at that spike low that we got, okay? We came up, double topped, put in a higher low. There's a MACD, the MACD confirms that momentum has shifted, all right? And if you're a position trader or a swing trader, then you got long there, and you got long into the prior highs, which was the 135.40 level, all right? So I hope some of this is kind of starting to hit home for you guys and gals, because it doesn't matter if we're trading this intraday or the weekly or the monthly, all right? As soon as you achieve your target, you want to take the money. Now, did we overrun the target a little bit? Sure we did, okay? But it was only in a setup to go for a counter trend trade short. Go ahead, Mark.
No, just what I wanted to tell you, there's a lot of questions that we are going to take. It's about 12. We are going to do a little more charts, but some questions came and say, if you don't have Ninja or e-signal, what do you do then for the DTs analysis? What we do is we provide those by 8 a.m. where we give you buy zone, sell zones, and caution zones, and we write an article, a little bit of a snippet of each markets that we want to trade. So we tell you, look for the crude, look for the euro. Like this 2 days ago, 3 days ago, we were like euro long, which was good, crude long, and it worked. See here, like on the 21st, CL, watch here, if holds 94 this AM, can push 95. Well, the crude went to 95.50, so it was a $1,500 trade, because we see it coming with the shift of momentum, with the retest of the trade setup and the chart formation. The 60 the same. Watch the 134.40, 135. Above longs clear, so we can hold 34.40, went to 35.50. So you can see those are stuff what we do. And so the Thinkorswim users, because I use Thinkorswim too for my options, for instance, Kevin is a Thinkorswim user with his hedge fund, and he doesn't have the auto plotting tools. We offer those auto plotting tools for free with the analysis for Ninja, eSignal, and TradeStation. But he doesn't use them. What he does, and the Thinkorswim,
I just manually put them in.
Yeah, because
just manually put them in. Yeah.
And he color code them the same as we do, and he keeps the charts clean. You have to understand that the analysis comes from over an hour of work here from those full Pro Tools. See, if I remove this is the full Pro Tool. And what the full Pro Tool is, give us all the elements that you guys want as a trader, which is what is the current direction, up or down, which is the immediate arrow up or down. Continuation of the trend with the blue dot, which gives you an over 60% of a continuation of a move. As you can see here, it went from 75 to 1802, which is almost 30 points. And then between an important support and resistance, the dashes and the green lines, we want an area of retracement within the trend. We told you, if you want to stay with the trend, you got to know where's the retracement within the trend, and we use those segments between important support and resistance. The reason I'm explaining this is because those are the setup you want on your charts, even with your own methodology and process. You want to know what is the immediate trend, compare that versus the weekly and monthly trend, which is the overall trend. Number two, you want to make sure you have a trade setup and a chart formation, because we wrap up the entire logic here, right, Kevin? Trade setup plus the chart formation. And three, you want a retracement area where you guys can come back. If you miss the first break up or the first breakdown, you want an area where you can come back and know where are those retracements within the trend. When you have those four elements, you are doing a trade that has a higher probability of success than most of the traders out there. Of course, you need to overlay strategy that works, like option strategies with 66% to 95% chance of success, like we do the weekly options on the SPY. We sell a premium around the zones. But if you don't have this right, your option strategy, your future strategies, your Forex strategy is going to go down the toilet. So if you want to
stay on that chart, Mark. Stay on that chart.
Yeah, go ahead.
Yeah, stay on that chart. And that's the other thing. Now Mark and I have done several recordings, and they're on iTunes, and you guys can you guys can review and listen to them again, because there's a lot of information. Stay on this chart, wait, please.
Yes.
There's a lot of information there. So do review, okay, what we've said. But I want to give you one thing here, okay? When the market comes down and makes a low, all right, then we want to anticipate that there's going to be a matching low, all right? There you go. Thank you, Mark. What are you, telepathic or something?
Well, I know what you're talking about.
Yeah. So what happens is that any time you put a chart in front of us, all right, because we've looked at this for so many years, we just zoom right in to the setup. We zoom right into the trade setup and right into where the moneymaker is going to be, okay? So anytime that price comes down and makes a low, right, at a DTZ level, all right, then what you want to do is you want to anticipate taking action there, all right? And what I tell my traders is the first trade is a scalp, okay? We're just trying to put some money in our pockets, all right, from a reaction off of a support level or a resistance level. Now the second visit down to that level, that's your trade right there, okay? That's where we want that trade. Now we either want to see on where right underneath 1121 when it comes down and retests this level at 1775, okay? It comes down and retests that level. And so you want to say to yourself in your mind, okay, am I going to get one of three things? Am I going to get a matching low where price comes and exactly matches that low? Am I going to get an undercut low, or am I going to get a higher low? All right, there you go. Thank you. And so, and then look at MACD down below here. What is MACD doing? I have a MACD divergence, right? My histogram, the momentum has already shifted. Buyers are accumulating, all right?
Yes.
And this puppy is going to go up. And where it's going to go up to? It's going to go up to the prior level that it broke down from, the 1790. That's 15 S&P points, all right? And I can tell you, with some size, for me, right, that's like a $15,000 move in one position, all right? So with my guys, we trade it down to the level, we trade the scalp the first bounce, we trade the second bounce, and then we trade a position trade back up to from 1775 to 1790. Now you don't have to do all of that, all right? And that's for experienced traders, okay? But if you just caught one move, right? If you just got one trade within that in a one-day period and made, 60, 80, $100, and you did that 3-4 days a week, that'd be sweet. You know, that's like $1,200 a month, right? For catching
Just to
some
let, yeah,
minor
just
move.
to let know everybody, this move happened in 48 hours. It's a 60-minute chart day trading zones. And that cross retest higher low with up arrow, blew that up to the top. Just FYI, is a 30-point move on the ES, which is $1,500 a contract. But if you look even more importantly, because I don't trade the ES anymore, I trade the SPY. That is a huge move on the SPY. The options double and triple. Easy.
Yeah. Yeah.
And on the close of this day, when they touch here, which was the weekly number day trading zones, I took 20 contract SPY, which was in front of almost 100 traders on Wednesday, Thursday. And then this was an easy one after that. Okay, yeah. So why do we like the SPY? So the question, let's start answering questions because they're already too after.
Good. Yeah, so, we like to use SPY because it's very liquid. If you can pull up the option chain, Mark, that'd be awesome. There's a lot of volume. Okay.
How did you know I had my option?
So stop doing that.
Bring my options.
So what happens is that it's very liquid. Okay, you've got a lot of volume, a lot of open interest. All right, at each strike. And
let me pull the volume so people can see.
Good.
And we are going to show also the December volume. Okay.
And we're looking for a really narrow bid-ask spread. Okay. Now, people ask me all the time, well, you know, when you're trading directional, Kevin, how do you pick a strike? And I just tell people, hey, you know what? Let's take something from 50 delta to 80 delta. All right. So let's look first on the weekly calls. Okay. The ones that have 6 days to expiration, up at the top left there, the 181s. All right. Look at that bid-ask spread, okay?
Are you on the weeklies or December? So
yeah, on the weekly there, yeah. Okay, you've got a 2-cent wide bid-ask spread, okay, on the 181. The 180.50, all right, is a 1 penny bid-ask spread, okay? And then look at the 180. Oh my God, it's 6 cent wide, right? So we want to stay away from 6 cent wide, all right? And we want to go toward the narrow bid-ask spread, all right? Now, the volume is higher on both the 180 and the 181, okay? But this bid-ask spread is really sweet, okay, at 1 penny. Now, why is that so important, all right? A narrow bid-ask spread just means that, number one, I'm going to get in, all right? I'm going to be able to get in fairly easily. I might have to give a penny up to get in, all right? But I'm going to get filled very quickly. And when I exit, okay, what I'm recommending is, and I tell this to all my traders and for years, all right, let's exit at a market order at a certain price. Well, geez, aren't we going to get clobbered, you know, getting out, right? No, we're not. We're not going to have slippage. We're only going to have 1 penny slippage, all right, which is pretty standard anyway. So when you have a narrow bid-ask spread, you can get in and you can get out, all right? So this is on SPY.
Okay,
we trade
let me add quickly something,
yeah.
Because Kevin and I trade 50 contract to 300 contract on the SPY daily. And that's just a fact. I mean, do you still have the screenshot that we showed earlier on?
Yeah, you got it up there.
Is there any position there that shows how many?
Yeah.
Here it shows a 10 contract. Where is there any that shows your
that first one? There's 200 right there.
Where?
Yeah, right in front of you.
Right there. Yeah. So can everybody see that? Quick yes, no. When we tell you we mainly trade SPY directionals, and I do some Apple's directionals, but mostly everything else, like the Google, the crazy ones. What we do is we sell credit spread for weekly and monthly income, everyone. And so the point of the matter, the reason we love SPY is, like Kevin says, the spread, the bid-ask spread is the best in the industry. But look at the volume again one more time, that you understand that, because it's profound. When I go 200 contracts or 250 contracts on my account on the on the SPY, everybody, look at the volume here. There's 30,000 of interest on this strike. There's 62,000 contract. When I trigger an order to buy at 60 cents or 58 cents, I am not screwed. I get filled right at the bid and ask every time.
Yeah.
Granted that I choose the strike where there's volume and there's open interest, but I have a certain way how I structure my delta during the week when we do those directionals. But again, I don't like the Apples and the Googles because look, you've seen here what Kevin and I showed you. This is a 1 cent spread, a 2 cent spread, a 3 cent spread, and the worst one is 6 cent spread. Let's look at the Google, shall we? And look
Now
at
this is
Google
after
now.
hours, guys. So guys and gals. So this is after hours. So the bid-ask spread is wider. All right. When the market maker goes home, they widen that bid-ask spread because they have positions that keep them neutral overnight. All right. So this is artificially widened. All right. So just you keep that in mind that it's artificially wider than it normally is. Go ahead.
So what we do again? So the entire process again. We go here, we start the day, we have already our analysis, our trend. We look for a cross retest. So we have the trade set up. We look for chart formation or a cluster high, cluster low. We want to go from the bottom of a caution zone or bottom of a sell zone for a long up to the buy zone on the extremes to increase the probability. We look at the MACDs. We pinpoint. See the trade navigator? I have 9 markets usually that I trade. I focus on those. So I want to pinpoint for the day. Am I going to trade directionally Apple or SPY? So like I look at the S, the SPY, I look at the S to help me with my SPY. So I might zoom just on the SPY and the 6E or the SPY and the Euro or the SPY on the crude. So we choose only 1 or 2 instruments. But the reason we like SPY is that we can get in and out with size without being screwed by the market makers. And look at Google now. You want to talk about being screwed? Look at the bid-ask spread on this Google, 1080, 1150.
Yeah, it's 70 cents. Yeah.
Do you guys see that? Quick yes, no. 70 cents. So when you buy that at 1150 and you want to get out right away, everybody, we become instantly the sucker that pays 70 cents just to get out. And just to let you know, 70 cents doesn't seem much, but 70 cents is huge on 10 contract. It's $700. 70 cents divided by the entry price of 1150, you overpay on the spread. 6% spread, everybody. We are becoming instantly the sucker that pays 6% of our money to the market makers. The market maker does that 6%. We lose 6% unless you are the seller of options. That's why we use a small portion of our account to do the directional like the SPY, and most of our account, 80% of our account, trading at 66%, 95% chances of success by creating weekly and monthly income by selling time decay, where we sell the options and use the tools, the day trading zones, action tools, buy zone, sell zone, caution zones, and the trade setup. We show you the entire logic that we have been showing you for almost an hour and 20 minutes now. But you see the people who do directionals on Google, it's retarded, 20 cents. We don't want to give money to the market makers. We want to trade like the market maker or trade where the professionals are. The professionals trades the indexes or they sell premium, and that's how they make consistent money. Does that make sense, everybody? Quick yes, no, because what we share with you guys is years and years of trading, is years and years of experience that we do every day, you know? So
let me add one thing
we
while
have
you got
losing
this
trades?
screen up.
Sure, we have losing trades. Do we have losing days? Sure, we have losing days. But we trade real money every day, which at least you are listening to people who are in the trenches, not the people who are just selling you a PowerPoint for the day.
Let me add one thing here, Mark. Wait, don't erase anything, okay? While we have this screen open, okay? So it's really all in the subtleties. And for those of you that are experienced traders, okay, that are experienced traders, and you want to trade Google or Apple intraday, and you want to do it directionally, all right, and you're just at a quandary as to what to trade, what to choose. what I'm seeing recently, now this is just in the last couple of months, is that the machines are trading a lot of volume, right? The computers are trading a ton of volume at the 30 and 40 delta. All right. Now, normally, as a fund trader, I really don't want to touch anything other than 70 delta. But what we've seen is that 70 delta strike has actually been attacked recently by market makers. They widen that bid-ask spread because the word got out there to the general public that, hey, guess what? Since March of 09, we've all been trading 70 delta, right? And so what happens is they've widened that bid-ask spread. All right. And so what you want to do is, no matter what the strike is, you want to look at the bid-ask spread. All right. And you want to say to yourself, if you pick a 40 delta or a 35 delta or a 60 delta, okay, you just want to say to yourself, how many cents am I getting for every dollar move of the underlying? All right. How powerful is delta? All right. How close am I to expiration? All right. Now, when we do this, when Mark does his mastery course, we'll talk about time decay, and I'll come in and I'll give some specials on that. Okay. But when you're trading weeklies, boy, you better be right. All right. And, or you got to be right out. Okay. But the power of this bid-ask spread, this is super powerful, because if you have got a narrow bid-ask spread, and I've seen 6 cents, 8 cents on Apple and on Amazon that I traded on Friday, I saw a very narrow bid-ask spread. So as long as you gravitate in toward the narrow bid-ask spread, then you can get in, you can get out without giving too much away. Go ahead, Mark.
Someone say, what are their power on the SPY? I think there's 3-4 powers that you have to look on the SPY. Number one is that the SPY has the most volume, so you get in and out of 200 contract, which is 20,000 shares, all you want, and even more so if you have a small account. The power of SPY also is you can replace one ES, which you use $10,000 per contract, and you can use 10 contracts on the SPY for about $1,000. So everybody in the room can essentially trade and start the SPY with $500 and $1,000 to refine their skills, which is the best instrument to learn how to day trade. Number two, those are not submitting by manipulation. You have no manipulation, no earnings manipulation, no insider manipulation. It's so super thick. Number three, you still make doubles and triples. And I'm going to prove it right now on the chart. Look, if you look at the day trading zones cross, retest of the 178.66, you know you want to buy option at about the 178.50, 170 area. Look at the 170 call, how it behaved this week, which expires next week. Because I think you guys really have to understand how Kevin and I make sometimes thousands and thousands of dollars regularly with those because of all the above we've just explained. Look at the 170. Where's this period? Let's Google. And Kevin, let's take a good minute answering some other questions too. So let's look at the 170. The 178.50 when the day trading zone crossed and recrossed, or the 179, even better. So the 179, again, look at the day trading zones cross recross. You had the cross recross retest at the 178.50, 179. When it passed the 179, it's even more confirmation. Now look at the calls here. The calls is you are bullish on the move. Look at this chart, everybody, for the past few days. Can everybody see it quick? Yes, no? And let's see if I can change that to more than a day then. Let's do the last 5 days, and let's do maybe a 10-minute. Can everybody see that chart? The low Thursday, okay, or Wednesday was 56 cents. Quick yes, no. 56 cents. 56 cents, the high is 2 cents. So I want to compare that to the ES so that everybody sees the power. 65 cents, 70 cents to about $1.92, $2. So $2 divided by 70 cents, it's 2.86 times your money, 286% return on your money. So now watch the ES now. Write that down. 286% return. Now, who in the room has about $1 and can buy 5 contracts and risk $500 to $1,000? Say me. Because if you cannot risk $500 to $1,000 in capital versus an ES at 10,000, then you have no business being a day trader. You should do something else about it. So your risk tolerance is not there yet. So most of the day traders have $500, which was 65 cents to $1 here, and this thing went to $2. So you had a 200 to 286% return on your money. Now look at this. Now look at the ES. Let's say that you were the best ES trader. Can everybody see the full Pro Tool on the day trading zones for the ES? Quick yes, no, because this is profound. So this is 75. And let's say you are the best trader on the ES. You went from 75 to all the way to the 802, which is 28 points. 28 points times $50 divided by your capital requirement of $10,000 to be safe on the ES, because most traders use a 2 to 4 points on the ES stop loss, which is 1 or 2% of your account, is 28 times 50 is $1,400. $1,400 divided by $10,000 is only a 14% return versus the 200% return I just showed you.
280, yeah. 14%
Do you see the power
versus
of the
280.
SPY now, guys? Same risk, 20 cents stop loss on the SPY, 2 points on the ES or 4 points on the ES. Same risk, 200% return on one, 14% on the other. Capital requirement on one is $1,000. Capital requirement on the other is $10,000. Huge, no?
Yeah, it really is.
Isn't it huge, everybody? It's huge. Hopefully we are able to make you think about your trading differently, and that you start thinking, wow, what are the guys trading real money for 20 years, 30 years, and still in this business doing? That's what we are doing.
Now, I want to clarify.
And we do those type of trades.
I want to clarify that, we're not recommending that you trade 10 contract SPY, or that you trade 1 or 10 contract ES, okay? You're going to have to, based on the amount of capital that you have, all right, decide what your position sizing is. But I always encourage everybody over the years to trade very small, or trade paper money, all right, and see how you do, right? But trade very small, because you have to outlast the learning curve, and losses are part of trading. So you're going to incur losses.
Michel said this is 185%. Well, we were very close. 185% return versus 14%. We still make the point. You make 15 times more money in return of capital on your capital, and return on investment percentage-wise. Your capital outlay is 10 times less. It's extremely powerful. Yeah. We just want to share that, guys. That was not really the purpose of the of today for the technical analysis. Is there any Q&A that we have not answered? We are sorry, guys. There were almost 650 people at the top here. There have been people coming in, coming out, and when you guys ask questions, those questions keep on being pushed to the top. So we probably have not answered everybody. Sanjay. Sanjay, do you see Sanjay's questions, Kevin? Kevin,
I don't see him, but go ahead and just repeat them.
He says, Kevin, going at the money on SPY for low spread has a higher risk with no buffer zone, isn't it? It has higher risk, not really. If you compare a credit spread and a directional play, they are both plays that have defined risk. You know that the maximum you could lose on the credit spread is the width of the strike. The maximum you can lose on the directional is your premium, and we put a 20-cent stop loss. So do you know the maximum you can lose is 20 cents, Sanjay? Yeah. Next question.
Well, Mark was saying that if a directional option costs you 65 cents, all right, your risk is that option could go to zero, all right. So that's your real risk, unless you have a stop put in place. Now I trade with a 5-point ES stop, okay. So that's a 50-cent stop on on SPY. So keep that in mind as well. That the wider the stop, the more the higher your win ratio is going to be. All right, and when a directional option goes from 65 cents to $2, okay, that's almost triple your money. All right, so that's what we were trying to emphasize, is that's about triple your money on a 1 day or a 2 day swing trade. Okay.
Hold on. Next question. Why do you use 2 MACDs? 2 MACDs because if you look at the setting, we have a fast MACD 16.99 and a slow MACD 12.26.9. And when I have both crossed, I know the direction is up. It's just a confirmation of that prior cross, recross, retest. See, the day trading zone did the cross, recross. We have the retest, and they are aligned pretty good. But the slow MACD is delayed. But when they are all aligned, it gives you that extra assurance that you are in the trend. I have an hedge fund trader that uses our tools. His name is Denis Moraes. He's the principal at Horizon Point Wealth Management. He's also a contributor on the Real Traders community, and he is the one who has helped me over the years to use those MACDs with my tools, because he manages over $80 million in cash with that, and it works very, very well. Okay, another question. Let's try to bang as many questions before we leave. It's Saturday. I know everybody wants to get out, and it's already an hour and a half into the event. Let's see. Mitch, Kevin might want to remind people that most of your trading is done in the early morning period. Okay,
yeah.
Kevin.
Okay,
That's
yeah, good. So
from Mitch. So obviously he's a friend of yours.
Yeah, no, he's my number one trader. So thank you, Mitch.
Okay.
So yeah, we do a bulk of the trading in the first hour and a half of trade. About an hour into trade, we'll put a Fibonacci retracement on this entire morning move. All right, on the entire hourly move from the low to the high, and we'll project where price may retrace to. And we usually spend an hour and a half in the morning trading, about a half an hour before the market opens, so it keeps us fresh. Okay, we'll get in, we make our money, and then get out. The chances of misdirection really after 11:30 Eastern time are very high. Okay, the chances of getting caught in a trade going the wrong direction are very high. So what you want to do is by 8:30 in the morning, or I'm sorry, 11 to 11:30 in the morning Eastern time, you want to try to be finished with either your morning trade or the trades for the day. If you're positive, just walk away and go enjoy your life. Keeping it fresh like this and not wearing yourself out by having swing trades or overnight holds, that can really make the difference. You just have to decide what temperament you have, whether you want to hold positions overnight. But we typically will trade in the morning, make our money, and then walk away.
And it's not only you, it's most of the market makers and the professionals. At the open, what's happening is at the open you have an imbalance of orders. The market makers try to balance the orders with the opening price, and so you have a burst of action for the first hour and a half. And then after the day kinds of die down. So typically for 20 years, if I count all the days that I make and lost money in the afternoon, I would completely tell you that the afternoon will make you lose money over time. So you better just the odds are with you within the first 2 hours, everybody. James says, well, you can get the day trading zones. We have a day trading zones free ebook on mastering probabilities, support, and resistance with training videos that reinforce some of the concept that we've done today with real money. It's free. All you have to do is go at daytradingzones.com and sign for this. I don't know if Kevin from Real Traders posted that. And if you're interested about the Trade Navigator, which is our analysis, you have a trial that is being offered for the Real Traders community for only $7. So $7, it's not even round trip commissions that you pay on your futures. and you can try and see if it makes you more than $7. Even if you make $16, you double your money. But ask Kevin, he uses this every day, and then he makes thousands with it. So
Yeah, it saves me so much homework time because my levels, I was doing these for years independently. And when I came across Mark, I said, my gosh, you have the exact same levels as me. What's the story? So we talked about process, and I don't do my levels anymore. I just have Mark do it. And when I'm looking at other charts, then that's fine. I mean, I can derive my own levels. But the DTZ zones save you so much time. And again, being fresh, you know, what Mitch was saying was limiting our time, being fresh when you come to the market. That is so key. Also, folks, Mark and I have done many of these discussions, and the content of those is posted on iTunes. And the value of those, I mean, you know, you could pay $2,000 or something for a DVD set of or a CD set of webinars. You know, it's free. It's for your downloading. So go ahead and enjoy it, use it, and we just want to bring some value and help you guys that may have been struggling.
Now, when I do directionals, Sanjay, you can do both directionals. When we talk about directionals, it's mostly in and out of the put and the calls on the SPY. Otherwise, I would say it's a credit spread. Okay. Brent said, do you read the VOLSP? Yeah, I think it's a good one. I have a volume indicator. I have a proprietary volume indicator on the full Pro Tool that calculates net buyers, net sellers. Right there, let me show you quickly before we leave. See, can everybody see that? Quick yes, no? And yeah, by the way, an ancient gentleman, he says, is those levels floor pivot? You can see they are not floor pivot because look, all those are floor pivot right there. Floor pivot, floor pivot, floor pivot, floor pivot. And they are in betweens or in between our day trading zones. It's not the same pivot. So that was
when there is a confluence, between floor pivot and a DTZ level, then it just makes that doubly strong, doubly important. You better really take another look at it when you have those R1, R2, R3 levels, and then there's a confluence with the day trading zone levels. Then yes, you want to make sure that you really hone in on that, and you'll see the chart that he's got here. There's a floor pivot and a DTZ level together. When they are together, they really are strong support and resistance. Go ahead, Mark.
Yeah. So what happened, well, usually, mostly when I use them is if there's no DTZ above or below. But the point is this. The volume indicator are net buyer, net seller. So look, if I do this, and you can see how it confirms the move. See how strong? Net buyer, net buyer, net buyer, and it's more smooth than a real chart. And I have also the support and the resistance. So each light blue candle is a net buyer, each dark blue candles are net sellers, grays are neutral, and these ladders color code themselves green for support or brown for resistance. So they should all be pink here. Like if I probably refresh, they all should be green, I mean support. And so that confirms also the SPY move from a cross, recross, or day trading zones move. So that's all it is. So I do use volume. You can use that free one on a
Thinkorswim. Yeah, it's called equivolume bars. Equivolume.
It's not the same at all, but it's a good one too. You know, you don't have support and resistance within the indicator itself. You know, it's very rare to have support and resistance within the indicator, and this is not net buyer, net seller. This is the advanced decline, is it? What is it?
Yeah,
that's what it is, right? And this is cool too. Yeah. This is another one you can look.
Thinkorswim also has bars called equivolume. If you went to your Thinkorswim chart and under style, you clicked on style and scroll down to chart type. Instead of candle trend, that's what I typically use, then you can say equivolume. All right. What I recommend if you're a candlestick reader, everyone, is to have, if you're looking at the 5-minute SPY, then have an equivolume chart and also have your candlestick chart right next to it, because you've been reading candlesticks for years. You don't want to miss an obvious candlestick signal just because you're watching equivolume. Okay?
Right. The question is, do I Thinkorswim is my only broker? No, I have 6 brokers. It's easy to demonstrate. I'll tell you, most of my trades are easy. I'm not prejudiced. I do most of my trades where the commissions are the cheapest. If you start doing credit spread, iron condors which have multi-legs, you start paying over 10 cents from interactive broker, or 20 cents over interactive broker, or 30 cents. This, in my account, amounts for thousands of dollars. So instead of giving a vacation away every month to other brokers, I would rather bring my kids in vacation, and bring
Yeah.
my family.
Yeah, you give
You have to
yourself
be
a
very
raise
judicious.
when you're aware of what your transaction costs are. You're doing yourself a favor, and you give yourself a raise when you make that decision. So what you want to also get good fills too. I mean, I had somebody comment on Friday that the current broker that they were using, they were getting slippage, bad fills, no fills. All right, and that it was too slow and clunky. And we just said, hey, just pull the plug on that, open up another account. It's not that hard.
So is there any other questions?
We've had
Well,
more technical analysis. The emphasis today's discussion is much more technical pattern setups. Okay, we're a couple of math nerds though, and we've talked extensively about option choices. All right, about probabilities, about strikes to choose, about time decay, about the Greeks. All right, we've talked extensively in previous discussions. So please again go to that iTunes and download those and listen to those. All right.
um, let's see. We're approaching almost an hour 45 minutes to see the questions. The day trading zones, guys. This is the DTZ analysis on the 9 markets, which we simplified with 9 to 7 zones. This is the full Pro Tool. This is available on all markets, all instruments, all futures, all forex pairs. So, but that's different. What we like people to start is this, the simple way to better understand our philosophy, which is also the cheapest for you guys to understand and,
Good. Keep
and
keep that
understand. If
up
you're
there, Mark.
interested.
Keep
Yeah.
that up there, Mark, would you? Okay, so I want to point out one more subtlety, okay, and it's called a tradable void. All right, so if you've sat in on discussions with me before, then this will be a familiar notion here. Okay, so let's look at just keep the charts the way you are. Look at Apple. You see the way that the 3 gold levels are close together. Apple there, 523. 521, 518. You see all of that, the price action's very congested and tight in there, and that those levels are very close together. All right.
Yes.
This is why
Dangerous
we
zone.
call, this is why we call this the caution zone. All right, because you directional traders are going to get chopped up. All right, price is going to reverse. It's mean reversion trading within this area. Okay, so what you want to do is when we're doing the morning analysis, when Mark does his analysis and sends the DTZ levels, you want to pay attention. Hey, is this a congested area? The probabilities are against you when you're trying to trade directionally in this congestion. Okay, so let's go back. Let's go to NQ, Mark, just briefly. Okay.
Hold on, we have a question. I think it's Kevin from Real Traders. They say, "How do we find you on iTunes?" It's not day trading zones. I don't have an iTunes thing. It's is the Kevin from Real Traders around?
Oh, good. Wonderful. Thank you, Kevin. Okay, so this level from 523.50 up to 529, you see how that opens up, all right? One reference to another reference is a much wider area. We call this a tradable void. So when price comes down and touches that 523.50, right, if it were on a pullback, then we'd buy that level, and we'd try to buy that level back up into the 529. Okay, so think about that there's an open area to trade, and if you've got a tight congested area, don't trade Apple that day, all right? Unless you're selling premium above and below the market, don't trade Apple that day because it's in a chop congestion zone. That's why we call it the caution zone. All right?
Right. You want to trade space, guys. If you look at your own support and resistance on your chart, everybody that we interviewed earlier on have their own support and resistance. You want to trade space. That's space. That's space. That's crap. Because this is going to kill you. And that's why we coded orange with dashes. That if it's a caution zone, and you visually, there is money to be made sometimes on the caution zone with cluster high, cluster low channels, but you have to know the direction and trade in the direction of the trend, A, and B, you have to make sure there's enough space. To me, a 5-point on Apple range is not great. And if you look very carefully this caution zone, it's pretty much what happened on Apple on Friday. They went close to that 23 area, was 23.15, so very close by 20 cents or whatever, and then they went back all the way back down, or they started down and went up and back down. So the bottom line is that you have to be careful trading the area where it's too tight, because you are going to be crucified as a day trader. Like Kevin says, you better go out of the money within the directions, and it's really interesting.
Widen up your stop. And don't get married to a trade either. I mean, let's get into the trade, get close to the target, and take your money,
That's right. Hey, I think we have a slowdown in the terms of questions.
Good.
Everybody, hopefully that was helpful. We spent almost 2 hours today. We came with the 1 hour event, and Kevin, a Real Traders webinar, and we are a big part of the community now. Let us the leeway to present to you guys. So hopefully you learn a lot. There's a lot of powerful tidbit that I assure you, if you review again the recordings, if Kevin has recordings, I don't even know if this was recorded, you will really appreciate a lot of the stuff for your own trading, and activate and use some of the stuff immediately to your trading. And be careful, next week is Thanksgiving, guys. It's probably going to be a low volume week. There will be a lot of funky stuff coming. After Thanksgiving, usually the market is strong. But be careful, guys. Next week it might be the funky week. Have a nice Thanksgiving, everyone. I'm leaving tomorrow with my own family for a week. And have a great one. Enjoy, take it easy. That's been a crazy year for us.
Yeah, thank you everybody for being here. And like Mark and I always talk about, we've gotten to a certain point where we know we're going to trade, we know we're going to accumulate and win over time, and so we're supportive of each other. So in your own trading communities, be supportive of each other. Good communication. Try to keep it positive. Both amongst yourselves and internally. And if you need to go have a look in the mirror and give yourself some straight talk, all right, then do that. Do that by all means. Do your chart review. Thank you so much for your time and for being here. And it's very important to us. We learn and develop as we communicate with other people, and we're working on our communication as well. So peace and be well. Thank you. Thank you, Mark. Thank you, Kevin. Thanks for everybody for being here.
Thank you, guys.
Thank you, everyone.
Thank
you
you,
so
guys.
much for coming on a Saturday. And Kevin, thanks again for having us always.
Mark and Kevin, thank you so much. I mean, guys, if you guys could see the feedback that everybody's putting in there, I mean, it's just absolutely insane. Every time Mark and Kevin come on, they absolutely crush it. They blow us away. They hold back absolutely nothing. They're so generous with their information and the strategies. It's just, Sanjay, you said it, brilliant. And Eli, I mean, I could go on and on. Also, we want to say to you guys, because I see a lot of people saying happy holidays. Same to you guys. Have a great Thanksgiving. Thank you so much for spending your Saturday morning with us. We know that you got a ton of value, and we look forward to doing it again. Have a great Thanksgiving, guys. And again, just to recap, there's 3 links that you could check out. realtraderswebinar.com/DTZ for day trading zones, DTZ. That'll bring you to the free ebook and videos. Some of you guys were asking. That's how you get the free ebooks and videos. You get the free ebook and videos without having to sign up for anything. You just get the free ebook and videos. You just opt in. If you wanted to get the trial for the DTZ analysis with the buy zones, caution zones, sell zones, and the auto plotting tools, you would go to realtraderswebinar.com/DTZ free. Actually, I'm sorry. DTZ brings you to the free trial. DTZ free brings you to the free ebooks. Kind of self-explanatory, right? DTZ free brings you to the free ebooks and videos, and then just DTZ brings you to the free trial. And then /realtraderswebinar.com/iTunes is where you can get access to our podcast, where we're going to be putting, the best of the best replays. You'll already see the first 2 episodes are Mark and Kevin, and they did a series for us on just options, and it's just, literally, it could be bundled up and sold for probably $9.97 all day long, and it'd still be a steal. And you get it for free. We have replays from other guys, and every week we'll continue to add to it. Guys, again, thank you so much for being here. We appreciate your time, and have a great Thanksgiving. Talk to you soon.